to another episode of Always Up to Date. My name is Denise and this is Yahweh, and we are co-owners of Always Bookkeeping. Today we're going to be talking about bank reconciliations. So as you know, we have a quote and a statistic, and so our quote today is actually from Albert Einstein. His quote is, "If you can't explain it simply, you don't understand it." And the statistic that we have is that 50% of all businesses are out of business in 5 years, and 29% of those businesses failed because they cite that they've ran out of cash. So it's important for us to talk about bank reconciliations and see where our cash balance is at, have an understanding of that. So, we have businesses that are trying to make major decisions based on their cash balance, and they don't know how to look at their reconciliations properly, or they don't have any bank reconciliations, and so their cash is out. They think they have this amount, but in their bank they actually have this amount, and so they can make some pretty major mistakes if they're depending on a bank reconciliation that isn't done correctly. So, Yahweh, you have some questions for us today?
Yeah, absolutely. So, first one, what is the purpose of a bank reconciliation?
Yeah, so sort of what I just talked about, the bank reconciliation can help us to understand how much cash is actually in the bank. We use those bank reconciliations and reconcile them to the statement, make sure that the registered balance matches our balance sheet, so that we can be sure that our balance sheet and our income statements are correct with the cash, so that when we're looking at those, we know exactly how much money we have in the bank to make these decisions that may require a fair amount of cash.
And the main purpose of bank reconciliation is checking your records with the bank's records.
Yeah.
There are items that might be in your records that wouldn't be in the bank. For example, if you've recorded checks that hasn't been deposited by your suppliers, that would be something on your side. And if you look at the interest and bank charges on the bank, or some NSF checks, then that would be one of those items that you wouldn't know until you see the bank statement. So bank reconciliations are very important when it comes to checking your actual cash balance.
Right.
Excuse me. So a second question is, what is the difference between the register balance and the statement balance?
Yeah, so the statement balance is the balance that matches your bank statement. So in your accounting software, whichever it might be, you want to look at your statement balance first and make sure that it matches the statement from the bank. Then in between the statement balance and the registered balance, you may have uncleared transactions. The registered balance is the balance, and it should match the same day in your balance sheet. So if you go into the cash account in your balance sheet and look, say you're balancing or reconciling the May bank statement, your statement balance should match to the end of May, or whatever date is on your bank statement. The registered balance should match that same date in your balance sheet, and it should be the same as that. If it's out, there's something wrong with those uncleared transactions.
And you really want to look at the ledger. Some of the accounting software these days, they're very good to capture the bank reconciliation at the date that you did them. I know some of them will adjust on that depending on what transactions you've entered. So if it's the first case, then it's very easy to find out the changes in between what happened between your last bank reconciliation and the transactions that you have before your next reconciliation. If it's on the second one, it's a little bit harder if the bank reconciliations keep adjusting based on the changes that you made, because you really have to find out what transactions are still uncleared until your next one.
Yeah.
Why is checking the statement balance first a good idea?
Yeah, that's kind of your starting point. if your balance doesn't match your statement, if your statement balance doesn't match, then the rest of your reconciliation isn't going to work out properly. So it's so important to check the statement balance first and make sure that what you have in your records is what the bank actually has in their records as well.
If a register balance doesn't match the ledger, is a future item marked cleared?
Yeah, usually if the registered balance doesn't match, that's exactly what's happened. You've checked off a check or a deposit that actually occurred in a later month. So often, I know, especially if you're bookkeeping, you may be trying to catch somebody up on their bookkeeping, and lots of times, you're used to putting in 2019, but you're reconciling 2018. Sometimes you grab a transaction from 2019 and add it to that bank reconciliation, and so then your registered balance is out. And it's so important to check that registered balance as well. Lots of times people will just check the statement balance and think their bank reconciliation is done, but that registered balance is so important as well to make sure that you haven't taken any of those future transactions and added them to the statement that you're working on currently.
What items are in the unclear charges?
Yeah, so there can be multiple things in the uncleared charges. The main thing is checks that haven't been deposited yet. So you write somebody a check and they've just put it away and forgotten about it, or just haven't had a chance to get to the bank or whatever. And so that's the main thing. There could be some
yeah, well, it's sometimes there could be post-dated, or the posted date might be different from the actual transaction date. So those might be the ones that you might have recorded based on the date on the receipt, but they wouldn't show up onto your bank statement until a later date because they weren't posted yet. So those are the unclear transactions. I would take a look at those all the time because you want to make sure the reasonability of why they're still uncleared. If they're, especially for those purchases that you've made that are made from your bank cards, those should be posted in 2 business days the most.
Right.
So if they're hanging in there for more than one bank reconciliation, then maybe they did not happen, or maybe there is a double entry that happened. Yeah.
Right. Yeah. And we see that a lot. We see lots of people that don't really think about those transactions. Whether they don't know what to do about them, or they don't think they're important or whatever, and they stay there for months and months, or even years. We've seen some that have been there for years, just sitting there, and something needs to be done with them.
Yeah.
Yeah.
Why can't checks be outstanding for more than 6 months?
Yeah, so once a check is outstanding for more than 6 months, technically it is considered stale dated. And so it's no longer good. So if you have a check that's on your uncleared items that's more than 6 months old, you got to figure out why it's there. Again, like you said, is it something that actually didn't occur? Did the person that you gave the check to just forget about it and they haven't cashed it? What's going on with that? You need to figure out what is happening with that particular check.
Why shouldn't electronic payments show as unclear transaction?
So electronic payments, they should not show as unclear transactions because they should happen that day. That's basically what they are, right? Is electronic, and so they happen immediately. So like if you do a deposit, or if you write a check or something, it may take a few days to hit the bank, but electronic transaction, it should happen that same day. Now it could be a situation where it's the next day. If it's like if you make the transaction later in the evening and the bank hasn't posted it to the bank yet,
or weekends or holidays.
That's right. Yeah. So it could be that situation, but it should, if it doesn't clear that day, it should clear for sure the next day, the next business day.
Absolutely.
Yeah.
How long does it take for most outstanding deposits to clear?
So again, if it's a electronic deposit, it should happen immediately. You should see that in your bank the same day. Other deposits, you do a bank deposit, could take a couple of days to clear. Again, if it's a weekend or a holiday, you might not see it till the next business day. If you're reconciling an account at the end of a month, you might not see it until, and you made your deposit that last day of the month, you might not see it till the next bank reconciliation. So deposits, I think, are okay to stay uncleared for the next deposit, but they shouldn't be on there for more than another reconciliation for sure.
Absolutely. It should be the money should be available to your bank. If not, then the bank might have put a hold on it, so you might want to contact your bank about that and make sure that you'd be able to use that cash for your business. If you have a fictitious unclear deposit, is revenue normally overstated? Yeah,
for sure, it's overstated. So if you've made this deposit in error, lots of times what happens is you might get an invoice and you send a check out to pay that invoice. Sorry, we're talking about deposits. Somebody sends you a check to pay for that invoice, but you never receive the check. And so then maybe you send them another invoice and they pay that one and you book it a second time. You might see that deposit more than once. Usually that's what the problem is that you've put it in your accounting software twice. And so then it looks like you have more money than you actually do.
Yeah, another situation is that, and this is a common mistakes for bookkeepers, it's harder for them to match the deposits with the actual payments, because especially for business owners who have external bookkeepers, if you don't provide them with your bank deposit slips, they wouldn't necessarily know unless it exactly matches the amount. So most of the bookkeepers might book the deposits as sales receipt or shareholder contribution. There's so many things that they can categorize it for, and if the payment has already been booked in the software, then you have a double entry in there, and that's the mistake that we're trying to catch with these unclear deposits as well. If you have a fictitious uncleared check, are expenses normally overstated?
Yeah, the same as the deposit. If you have a check that's been uncleared over and over again, if you might have double booked that check, or whatever the case may be. And again, it's going to look like your expenses are more than what they really are.
Are the rules the same for related party or shareholder amounts?
Yeah, like you were saying, sometimes a deposit will get booked to the shareholder account, or an expense will get booked to there. And again, it may be in that uncleared transaction section of your bank statement. Most people understand uncleared checks, uncleared expenses, but then they see a shareholder loan expense or deposit and they think, oh, it's just the shareholder loan, it doesn't really matter. But it does matter, because it's going to make a difference on your cash balance in your balance sheet, and then your income statement might be out as well. And again, like we were talking about, if you're trying to make decisions based on how much cash you have and your balance sheet and income statement are incorrect, you're going to be making some mistakes on those decisions.
Yeah, especially another common mistakes that bookkeepers make is booking the transfers as outgoing transfers as expenses, or incoming transfers as income. You don't want to get taxed on the incoming transfers that was supposed to be let's say you contributing, and also if the outgoing transfer was booked in as a shareholder loan, you don't want to get taxed on that personally too, because you'll have to have that entry that's gonna figure out your salary or your dividend at the end of the year. You don't want to get personally taxed by that mistake. So those are the items that makes it really, really critical for a shareholder transaction or intercompany transactions when it comes to bank reconciliations and bank transactions.
Right.
Yeah. How often do clients have fictitious uncleared items, and what should they do about it?
Yeah. So, it would be really nice to be able to say that it rarely ever happens, but it probably happens, I would guess, more than 50% of the time. People just don't know, maybe they don't understand, just like our quote said, if you can't explain it simply, you don't understand it. And so maybe they don't understand what those uncleared items are. They just don't know how to deal with them maybe, and they leave it there. So I think if you don't understand it, or you can't explain those things, then you need to find somebody that can explain those. Like we said, it's so important to have your bank reconciliations correct, so that when you're looking at your balance sheet and your income statement, you know exactly where you are with your cash.
Yeah, absolutely. Also, with fictitious and cleared items, this mostly happen when you have an external bookkeeper, because most of the time your business is small enough that you can use your bank statements to do your bookkeeping. Sometimes you'll have to print checks and stuff like that, and those will not be cleared until at a later date. So those are the items that you want to think about, because again, if you're making a decision based on cash, that cash should be close to what you should be expecting at the end.
That's right.
Yeah. So I think that's all the questions we have. Thanks for joining us for this episode. Please click like and subscribe. If you have any comments or you have any suggestions on what videos you want us to do, please feel free to comment below, and we'll see you guys next time on our next episode.